Let's take a look now at some of the indices on technical analysis around charting the markets on this Friday, 22nd of December. It is a half day's trade in the UK and across much of Europe, and of course also in Wall Street later on today, which means that volumes are likely to be light overall. We've already experienced that here in the London markets. There's not much corporate data. There has been some economic data which has driven some activity in the markets, but broadly speaking, it is a day when people will either be shutting down positions for that long weekend. Of course, here in the UK, it's a 4-day weekend, but over much of the rest of continental Europe, markets are back on Tuesday, and the same sort of situation on Wall Street next week. But whichever way you cut it, it's a long weekend for the Christmas holiday. So looking at what's happening in today's session has to be in the context of what people are doing, and they are looking at ways of closing out some of their positions that they hold. Let's take a look at indices, and we want to go first with what's happening here in London for the FTSE 100. Unlike some of the other markets, it hasn't really risen to those record highs that we've seen for the likes of the DAX, the Dow, and the Nasdaq. But nonetheless, it's been a pretty good run recently. Fundamentally, it's on the back of what's been happening in the oil markets, which we'll take a look at in just a short while, as we see more money going into oil because of concerns about supply, potential shortages coming through from what's happening on the Red Sea, Suez Canal, a lot of geopolitics coming into play to send the price of oil up, which has benefited the London markets to a degree. We're down a little bit today, 76.84. UK is now on the brink of recession, according to data out this morning for the third quarter. Gross numbers coming through with a negative number after the second quarter was revised down from an expansion of 0.2% to flat. So we're on the brink of recession here in the UK. We just need the fourth quarter to come through with negative growth. But we did see some good retail sales numbers coming through, so there is a glimmer of hope, I think, for the UK economy. But the London FTSE 100 is still on this move up. It's a trend that's in place, despite the fact we've got a little bit of a pullback in today's session. I'm fully expecting, technically, a break of the 77.47, which is just above us where we are, which are the highs that we saw on this market back on the 20th of September. And that would then take us to levels not seen since the 23rd of May. Thin volumes can have the effect sometimes of giving some exacerbated or some larger than expected moves. And this might well happen if we see a continuation of this trend here on the FTSE 100. If you're long at 76.85, stock goes below the 7600 level with a view to taking that up. But as I said, it is going to be difficult trading to determine what's happened with trading over the next few days or so. On the 24-hour markets on the IG platform, we will continue to trade the FTSE 100 over the early part of next week. Quick update on what's happened to the German DAX. We continue to hold above this red dotted line, which was the highs that we saw, the record highs that we saw back in July this year. And we've stormed to new record highs over the last couple of weeks. We're holding on, broadly speaking, to that. So again, because we've seen a little bit of a retracement, it is just that in what is otherwise a market that moves up. We'd want to see a close down below the 16,000 level, I think, to really give us some potential further downside to go. Until then, it is just a retracement on this move up that we've seen recently for the German DAX, which has provided us with so much money in terms of percentage moves that we've seen on the DAX. That's a whopping 16.5% we've seen since the middle or back end of October this year. So it really has motored on the way up. Quick update as well on what's happening with the Dow Industrials. Wall Street on the IG platform, again, like the German markets, it's trading above the red dotted line, which is the previous record high that we saw on this market. It was 24 months ago, almost so, beginning of January or so, middle of January 2022. We've seen some consolidation, some pullbacks, but it is still trading above that. So like a lot of these markets, despite the fact we've got a little bit of a pullback, this is technically speaking still a market where we've got gains in the bag. If you are still long on this, stock goes below the recent 3,700 level that we've seen broken recently, which was that prior record high. So your stock goes below there if you think there's more gains to be had. But again, a warning shot across the bows that it is thin volumes and anything could happen, to be honest with you, in this holiday period. Let's look at what's happening on the foreign exchange markets. One of the big trades that we've been witnessing and talking about recently has been what's happening with the US dollar and that move that we've seen for the dollar. I want to begin first of all on the dollar basket because this is an interesting trade that we're following through on. And it's a trade that I picked out on a couple of days ago, this inverted pennant pattern here. Now, there's a little triangle which is a symmetrical triangle, and it's already made money on the downside because you measure the width of the triangle and you get the projection. The projection is on the way down. But I noticed the other day there was a little handle on a pennant, and I've drawn the length of that candle, the extremes of the candle, the wick included. That's what that arrow is down there. And I project that arrow down here to give me a price target of 162, which is the price we're going for at the moment on this little mini pattern trade on the Dixie. And it looks like it's coming good. When we see a completion of that, it would take us then down to levels not seen since the 27th of July. Now, as we know, the Dixie, the dollar basket, is just the inversion pretty much of what's happening on the euro dollar trade, because the euro dollar trade makes up around about 60-70% of the dollar basket. Now, in today's session, if we close at these levels, it'll be the highest close we've seen in this market that we've been around on euro dollar since the 31st of July this year. So we're knocking on the door of 5-6 month highs for the euro against the US dollar. It doesn't show any let up, and there's not really much between where we are at 110.11 and the highs that we saw back, what was that, the 18th of July at 112.75. Now, we know the dollar's weakening. Expectations are for further continuation of this as we see the Fed continue to cement that opinion that we've got interest rate cuts coming through next year. But also the European central banks in the same sort of situation where the ECB wants to cut interest rates as well next year. I think it's going to be a race, not to the bottom, but a race to see who cuts first, how quickly they cut, and what this does in terms of the currency markets. But at the moment, at least, the euro is on top of the US dollar. Let me just round off with what's happening with other markets and this dollar yen trade, on the assumption we're going to get a continuation of the weakening of the dollar and a potential at some point in the not too distant future, possibly for Mr. Ueda and his team at the Bank of Japan to start raising interest rates again, away from that loose monetary policy we've seen from the BOJ for so long now. And we've got a continuation of this trend, I think, all the way down to the 76.4% retracement at 140.57, which were the lows, or the last time we were at that level was the 28th of July. That is my initial price target down here for the dollar yen, with a trade with the stop loss around about the 142 level. If you are short on this at 144 level, I beg your pardon, for your stop loss just above some of the candle closes we've seen in the last couple of weeks or so, with a view to taking down to 140.57. If you get a break of that, you're then on the way down to a total retracement down to the 137.05 level, which were the lows we had there back on the 13th of July. So I think this next line of support to watch out for is 140.57. Any candle close below there, you take that on further on down with a view to making more money on the short side for the dollar yen trade. Now, one of the other trades we've been watching is within the context of that weaker US dollar is what's going on with the price of gold. I wanted to start off with a look at the commodity markets with gold, because it has had a spectacular rally again recently. Of course, we saw that record high back on Monday, the 4th of December at 21.21. Where it broke the previous high, and it gave me the profit on this trade here, where I saw the banded trade make money all the way up to 2090, but 21.21 was far beyond that, and that is now my next price target here at 2052. My stop goes underneath this rising blue line, which is the 100-period moving average. So your stop loss at the 2000 level. 2052 is where we are. Price target is 21.21. Let's update you as well on what's happening in other markets so far as the commodities are concerned. Any dollar-denominated commodity always does well, relatively speaking, when you price it in dollars against a weaker dollar, and a weaker dollar is what we've got. So we've got money gained to some of these commodities just by dint of the fact that we've got that weaker dollar picture. But I think there's also another fundamental reason as to why we're seeing a gain in the price of Brent and WTI alongside it. WTI is just below the 75 barrel level, and we just, as I'm speaking, just breaking the $80 barrel for Brent. So for me, this is a little bit of a sort of a watershed. If you get a candle close beyond here, I think it's then on further on up. But where do we go from this point? There's concerns fundamentally about the restriction of supply for the oil market because of what's happening in the Red Sea with the Houthi rebels. And at the moment, at least, the concerns about restricted supply, seeing money going into oil. This is the next price target up here at 84.58. So it's about $4.50 or so from where we are in the bag on terms of the upside. If you draw a fib on this, you might get a little bit of resistance. Let's take a look at what we've got in terms of the numbers for the fib and a potential line of resistance. In fact, we're at one at the moment at 61.80, 61.8% retracement on this move here. But if you look at the next 76.4% retracement, that coincides really neatly with the 200-day moving average. So that could provide a little bit of a headwind as well. But I think if we get a continuation of the geopolitics that we got at the moment, we could well see a total retracement all the way up to 84.58 in quite quick moves, I think, over the next week or two. if we see an uptick in the geopolitics for that. Let me just leave with one other chart, and that is one that I've been following, and this potential move here for this inverted head and shoulders. Just want to take this down because we haven't actually, technically speaking, we've not got a neckline break here yet at the moment, but when we do get that, my best case is that we're going to get a trade all the way up to 94.06. in however speed the market wants to take it. But I think the idea is that once we get a candle break beyond that neckline and that inverted head and shoulders then starts, having measured the bottom of the head on the inversion to the neckline, I've projected that up and I've got that 94.06 is the line to watch out for, which coincides quite neatly with the highs that we had back in January 2023. Do we get there by January the 23rd, 2024? Well, that's a possibility, and we could well see a one-year high then for the price of copper. But for me, there's a fundamental reason as to why we're looking potentially at copper being traded on the upside, because if we see interest rates come down, that's likely to increase demand. Many are now saying that copper is going into deficit anyway because there's not enough supply coming through for the potential demand that we're going to get. It's just a question of when liftoff happens. And when that does happen, I think it could well be a swift acceleration, potentially up to the 94.06. If you want to take part in that as a trade, as ever, you want to make sure you put your stop loss in place just in case there's a snapback. You don't want to lose too much money. It's inevitable. I think as us traders, we always lose money on some trades. It's just a question of making sure you mitigate those losses with your stop loss placement relatively close to where you are. If you're to set this up, my stop loss would go underneath the 200-day moving average at the moment, just below the 8400 level. With a view to taking this up, you get a candle close beyond the neckline, and then you continue to bring your stop loss up, locking in the profits on the upside. If it turns down, then of course all bets are off, and you get stopped out, and then we put the trade back in the drawer and we don't worry about it anymore. But at the moment, at least, I'm waiting for the head and shoulders to break up, and we'll have to see what happens in that traded pattern into the new year. That's it for today's chart in the markets. Have a good weekend. It is a 4-day weekend here in the UK. We're back at 9 o'clock in the morning on Wednesday, Thursday and Friday next week. There will be no more early morning call. There will be no full formal chart in the markets. We're going to merge those two shows together as we have done in previous years. It's been quite successful just for the 3-day period, the Wednesday, Thursday, Friday next week. But I will be back on Wednesday next at 9 o'clock. And looking ahead, hopefully, to a nice, peaceful, long weekend for the Christmas break.